All right, good morning. Welcome back here to Trader Minute. Great to have you aboard. Market's been open here for just under 2 hours here today, and it's a interesting market this morning, to say the least. S&P is up. In fact, I'll chart it up here. S&P is up about 16 points. Building off of yesterday's move. The Nasdaq, the Qs, are up 1.5%, building even more due to Facebook, which is definitely helping to keep that index higher. We talked about Facebook this morning, just an absolute monster report. Microsoft holding up on its gap, but not exactly adding there to the Nasdaq. In fact, if you go look at the XLK today, the XLK is down while the Qs are higher, right? Which is a very interesting thing. You almost never see it, but it just has to do with the weightings. And if we come in and go XLK components here, and we just look at what the components are for the XLK, you'll see the weights are going to be a little bit different. Let's see here. All right, holdings. There we go. But you can see Microsoft's the number one holding here on the XLK. And so it's 18% of the XLK. Bottom line, if you buy the XLK, you're buying Microsoft and Apple. Right, that's what you're buying, and you don't see Facebook anywhere on this list, right, on the top of this list here, and that has that's why we're seeing the XLK down, but the Qs, which Nasdaq is, this is the top 100, the Nasdaq's on there, or Facebook's on there, definitely a little bit of a different type of move here. So very bullish moves, absolutely bullish moves here. We are seeing, other tech stocks really benefit, things like Twilio today. We talked about this one last week, and just didn't take off right on that, right on that candle, but, just kind of dragged along on some low volume, getting its really big, nice breakout day here today. So definite big positive there when it comes to Twilio price action, and we're seeing that across the board with a lot of tech names, even tech names that haven't reported here or reported their earnings here with that. One of the things to keep in mind with Twilio, the driver here is, they are talking about the SendGrid merger, right? And this is a company here with Twilio, and you can see SendGrid moving up right along with it. Twilio's bought out SendGrid, and that merger, or merging with SendGrid, and that merger is taking place here. So a lot of positives with that. I would expect for Twilio to merge or buy a few more companies. Twilio is looking like a company in the space that wants to be dominant, that wants to be not just, hey, let's build this to get bought out, but let's build this to really compete in the marketplace for many years to come. And so if you look at this stock and you look at the trajectory that the revenues are on, you can make one of those $220 to $320 arguments for Twilio, which, trading at 100, okay, yeah, sure. But it would not take very much for it to get up into that $200, $300 area. It will be susceptible to pullbacks. Pullbacks on Twilio are sharp. They're fast, they're hard, and that's just the nature of the stock and nature of the company and this type of trade. But, this is a stock that could easily, be up in that area. And it's not going to be up in that area because of fundamental valuations. I believe it has like a $4 book value, a PE ratio of something like 650 or something like that. Absolute, craziness. In fact, the company doesn't even make money. Their income's negative, right? That's But this is what a lot of those techs look like. These small techs look like before they kind of go. And we have seen Twilio finally, gaining some real traction in the market, some real respect in the market, and actually up to a $10 billion market cap. So moving out of that small cap area, moving out of that mid cap area, and definitely getting into a little bit more of the large cap area overall. We also saw earnings out of General Electric here this morning, and I've been going through them, and this is going to be one of the biggest up days for General Electric in its history. Not just for the recent years, in its history. Now that doesn't feel good for investors who've been holding it for a long time. But up here about $1.26, and it's pretty clear that the turnaround story is on. It's very clear that the turnaround story is on. And, are there some roadblocks in the way? Yeah, there definitely are. There are definitely some walls of worry here for it. But those should be bullish catalysts for it as those continue to get knocked on down. JP Morgan analyst has been very influential in terms of the stock, very influential in terms of even pushing it, but he's been spot on, dead on, and it's one of those where excuse me, I'm grabbing the comments here, but one of those where they made a comment yesterday basically saying there's a lot to still know when it comes to GE, and that this earnings report could provide, either that really strong bullish or bearish thesis going on forward. They haven't commented since yesterday, right? And I'm sure they will in the next couple days. And it's one of those that'll probably drive the stock another 10%. But overall, this does look like something where there's progress being made for the first time in a long time. It's one where their power industry has been a very weak spot for it. CEO did talk about that, talked about kind of, they're in this, he used the term, I believe, early innings here with it. So it's a positive, reaction, like a positive earnings, overall an improvement in fundamentals. I don't think it's going to be a straight up story, meaning you just go chase it and go. But, I do believe it's one that is going to be very buyable on dips as we go forward here with General Electric. And, if you take a look you take a look at some of the fundamentals here for General Electric. You look at their margins at a 10-year low, right? The margins have been terrible for them. Down here at a 10-year low, you look at their revenues. It's not at a 10-year low, but their revenues have just not been growing here with it. You look at the price of the stock relative to its book value, and even though the stock is tanked, it's still nowhere near what it was in 2009. So we're still not talking about an ultra cheap story. If you look at, though, the price to sales, we are talking about a 10-year low, right? And so, can you make a little turnaround argument here for it? You sure can. But there are still plenty of holes, plenty of flaws, and plenty of issues here with the company that that do need to be taken into account and do need to be watched here. Now, S&P futures have been creating an interesting pattern this morning. And we see them up, and they're creating this kind of diamond type of shape here. Okay, and I didn't draw that very well. Let me draw this a little bit better. Here we go. But this kind of diamond pattern, and these diamond patterns, they can occur either this way, or they can occur with a big spike right here up in the middle, creating this top. This is created kind of a little bit differently, but it's a very interesting pattern overall, and it's one that has pretty strong implications from a trade standpoint. You don't see it very often, but when you see it, it generally is a pretty accurate pattern. And basically, you just take a look at the high and the low of this pattern. And again, I'm not talking about the high for the day. I'm talking about the high for this pattern, which is up here at 2,700, right? And you take a look at these levels, and if one of these levels gets broken, it tends to have some very strong implications directionally, in the short run. And we're seeing this forming up here on the minute chart. You can see there's a little breakout of this, of this downward side here, but that's not all that significant. The significance will come if this 2,700 level breaks. And again, this is a short-term minute pattern. But we're seeing it in a lot of different stocks out there. This same type of pattern here. But 2,700 breaks, bulls are probably safe for the rest of the day and probably get more legs up throughout the rest of the day. We see it break and whipsaw back down. That's a pretty dangerous pattern. And if we see, the low side here get broken, we're probably talking about the market coming down to the opening levels here for the day, if that occurs, okay? It's not all bullish out there. In fact, you can see my board. There's a lot of red here on the board, right? And you go take a look at where some of the deepest red is. You go take a look at something like a Bank of America. Down 3% here today. This is a stock that's been holding up well, and down 3%. You look at Citigroup, it's not down nearly to the same degree here. You take a look at JP Morgan. It's down, but not to nearly to the same degree. We talked about these banks yesterday. They did not keep up with that post-Fed rally. And the Fed basically got more dovish, which pushes the TLT higher, which basically is what? It's flattening the yield curve. And, flatter yield curve, not really all that great for the banks. And so we're seeing a relief rally in tech and in some of the other spaces out there. But this isn't everything is rosy out in the markets here today. In fact, the XLF financials are, they're down 0.7%. Again, it's not enough to really kind of write home about and to say, oh, wow, this is a massive breakdown or anything like that. But they are lagging. We're also seeing materials lag here today, the XLB. Now, the XLB has been pretty much bought up since this morning. U.S. Steel reported earnings. And, this is a stock that, look, it didn't deserve the gap down that it had. It's one of those, we've talked about it. It is a very cheap story, a very inexpensive story. And they missed on revenues. They missed on earnings. And let's face it, the consensus going forward wasn't exactly all that great. Here with the, relative to some of the expectations. But it doesn't change that absolutely dirt cheap type of story. So yes, great, fine. The headline numbers missed, created the gap down. It's pretty much been bought up ever since. But we do see, materials across the board, shrinking here a little bit. But again, with this exception of these copper / iron ore names like BHP Billiton, which had a monster day yesterday, Rio, which is absolutely breaking out of this pattern that we've discussed, and it's just one where, this Vale story just continues to, see money pumped into, Anglo-American Vale or Anglo-American BHP and Rio. And, we talked about NGLOY on the OTC market, but this just continues to rip on higher, and it's a story that continues to be strongly bullish here, and not showing any signs of letting up. Is it overbought? Is it a chaser? Yes and yes and yes, but not showing any signs of letting on up here. we still have a lot of earnings to come. We're just getting into earnings season, just getting it rolling, and a lot of things to come here with it. But I think the early returns on earnings season are pretty mixed, very mixed, and it's one where I don't think we can look at the earnings season and say, well, it's a very bullish bias or a very bearish bias. I think you can do that with some stocks, with many of the stocks, where there's a very clear bias with them. But overall, I think some of the fears definitely being allayed a little bit here with the earnings season, and that's to me kind of the main theme right here is just some of the angst, some of the investor stress and anxiety in terms of what some of the numbers are going to look like has been put on hold. Now, we get into another investor stress and anxiety here a little bit as, many fund managers, when January ends, they're going to look at their books and they're going to go, man, this market was up big. This market was up big. And yeah, I'm up, and they're going to look and they're going to go, yes, we're up, but we are not up what the market is. They're going to be put in a little bit of a chase position. And I think we've seen a lot of that emerge here over the course of the last week. But S&P is up 8.5% this month. 8.5%. It's one of the biggest up months in S&P history, right? And it's going to go down as one of those biggest up months in S&P history. And it's going to be one of those where, what do fund managers do when there's the first little dip? And how they're going to react, because they can't really stay in and put themselves in a trail position, but they also have to be in, as it is rising. So going to be a very interesting time, very interesting implications. We'll talk about those, here as we go forward. Now, later today, I'm going to announce kind of what's going on here with the site and the challenge here. Going to do something a little bit different next week, and then start the new challenge. Regardless of how XLF ends, we'll be starting the new challenge. But I still expect XLF to end and give us a little chunk of change there. But overall, we'll make that announcement. We'll talk about that today. I'm looking at about 1 o'clock Mountain, somewhere around that time, 3 o'clock Eastern, maybe just a little bit earlier than that. But either way, we'll be recorded. We'll be posted on the stream there for you. All right. Thanks for being with us. Have yourselves a great one. And we'll talk to you later. Take care.